been an outstanding 12 months for Quintain. A year ago, we set out some clear targets for the group. I'm delighted to say, in many regards, we've not only achieved those, but we've exceeded our objectives.
The financial priorities for Quintain were very clearly set last year to sit alongside the repositioning of the company. Firstly, a focus on balance sheet management, and secondly, a focus on building sustainable recurring income streams with the potential for growth. We have recorded an adjusted profit before tax of £3.1 million, slightly down on the same period last year, and as anticipated, a reduction as we go through the repositioning period. Most significantly, I think, we have recorded a profit after tax of £7.1 million, and that is a result of both that underlying earnings generation, but also an increase in asset values. We saw investment assets at Wembley increase during the period, and this has led to the overall profit for the period and an increase in our net asset value per share. In the summer, we entered the debt capital markets for the first time in Quintain's history through the issue of a £150 million 6.5% sterling bond. We have introduced a new set of investors to the company, diversified our sources of finance, increasing liquidity in the medium term, but most importantly extending maturities on a significant portion of our debt to a period more in line with the long-term nature of our assets.
A key part of our strategy has been to grow higher quality income streams for the group. I'm delighted that's really occurring now at Wembley Park, not only with the performance of the Hilton Hotel, which we opened about a year ago, but also with the opening of the London Designer Outlet Centre itself, opened about a month ago.
I think what's interesting when you think about Wembley Park, it is about the place first and foremost. So we've now introduced a lot more soft landscape into the spaces, whether it's on Olympic Way or on the Wembley lawns. And then finally, that's really helped to inform us in terms of the design of the next residential phase.
So in early November, we announced the disposal of our interest in the Greenwich Peninsula joint venture. Importantly, for Quintain shareholders, that enables us to realise today the value which is inherent within that development and which we've realised over a number of years. It also enables us to reduce our amount of debt and, I believe, in one transaction, completes the repositioning of Quintain.
We ended the period with £453 million worth of debt, but once you pro forma in the transactions that happened after the period end, the sequel disposal and the disposal of our interest in Greenwich Peninsula, that reduces to £175 million on a pro forma basis. And that really demonstrates the transformational aspect of those two transactions. As a result of the performance in the period, net asset value per share increases from £1.04 to £1.06, but further to £1.12 once the impact of the Greenwich transaction is pro forma onto the results.
Well, asset management for Quintain has always been an incredibly strong generator of income, and it remains precisely that. Within asset management, we obviously have the Wellput management contract, but I sort of draw attention to IQ, which as a business with Wellcome Trust is delivering significant performance, performing really well in a very strong student market. And over the next 2 or 3 years, we see some really strong performance out of that particular part of the group.
Looking forward, the financial focus for Quintain will continue to be on driving sustainable income streams with the potential for growth. From a balance sheet perspective, we will be retaining an appropriate level of gearing for the assets we own, and also as we look to acquire new assets as we enter this next stage of Quintain's development.
So in addition to Wembley, we are creating a further pool of London assets where we can apply both our skills as developers but also investors. We're seeing a significant amount of capital internationally seeking to access the London market. And indeed, we believe there's a real opportunity for Quintain in particular to be able to partner or create assets for those type of investors and also UK institutional investors who are looking to participate in the London market.
Quintain is now in a unique place because it's reshaped its balance sheet and it's in a position to specialise in central London, and it has teams from the various disciplines you need to maximise value in good opportunities in London.
With Wembley Park and the growing London portfolio, we have a clear route map to delivering outstanding shareholder value.